I'm trying to find.
My God, it's Friday already.
Yep. How you doing, Rick?
Oh, I can't complain.
I'm trying to find my screen here.
Oh, you disappeared online there.
Can you see me?
You. Yeah. You just don't see it.
I don't know what screen I'm on. I got so many windows open.
Yeah, you got so many high-tech gadgets going on over there, so you can't. But we interesting couple weeks, huh?
Yeah.
I got to show everybody my Christmas present. When my father passed away, we took Dad's slide collection, and my oldest son and I, and we scanned all of his color slides in from like the late 1950s up and through the 70s and 80s, and made them digital. And we put them on a G drive so he could share them. And my son started pulling some of the photos up and then drawing illustrations. So like at the beach stuff. So he gave this to me for Christmas. This is my first car. The 1962 Mercury. I paid $200 for that car.
No way.
4-door with a 4-barrel carburetor, and I remember it fondly. And so he drew that, sketched that, gave it to me for Christmas. So I thought that was pretty cool. So, but watching the numbers over the holidays were just brutal, and we've always been talking here and going, man, what's it going to be like if we get below 8,000 homes? And we blew past that. And we got down to like 5,800 homes on the market. And we're waiting for January for them to come back on, right? And this week went down. You know how Tuesday we always get like the lowest number and then it starts creeping up? Yep. It didn't creep up. It's still muddled around the 5,800 mark there. And we're sitting today just barely over 6,000 by 80 units. That's it. 6,080 units. And the Cromford report, they're running out of words to use. They don't even know what to say anymore. When they look at the data, they said we're moving deeper into uncharted territory. And so the 7-day moving average, Pat, that I track, I show a little interesting change just today. So the holiday numbers they're gone. Right. So 7-day moving average. So, we're a little bit past that now, past the holidays. But so we had 3,146 homes come on the market and 2,959 go under contract. That's a lower number. We've always had more go under contract than came on, which tells me that just over the last 7 days, buyers are like, yeah, I can't find anything. I'm not even going shopping. But then we have to add to that the wait and see of the Georgia runoff, and then the anxiety at the Capitol just a couple days ago. That's having a huge impact. I think all of that had an impact on rates as well, right?
Yeah, it was the last 4 days of not, I mean, basically they've gone up. They've gone up. Technically, the 10-year Treasury is at 1.11, and like today, the mortgage-backed security bond got hit by 27 basis points from Tuesday, Wednesday, Thursday, Friday. Yeah, Tuesday there was a lock alert. We hit the low on rates, and then they've probably inched up about an eighth of a point in rates is a pretty dramatic move, believe it or not, in the mortgage market. Rates, they're not going up they're not reacting as drastically as they probably could be because the lenders have got built-in margin. I mean, rates, basically were low on probably hit the all-time low probably on Monday, during the holidays from Christmas time, December 23rd to January 4th. But they're not acting as drastic as they could because the lenders have got built-in margin because there's been a spread there because they have not lowered their rates because when the Treasury did go down, that they should have been going down even further. The rates, I don't know if I'm making any sense, but since we're just doing this, with no notes, but there's cushion for the rates not to go skyrocketing.
Well, do you think this little blip up was more of an aberration and not a trend?
Well, the trend has been was kicked off the bounce, the COVID bounce. The rates started creeping up. The 10-year Treasury started creeping up, moving up in the end of August, September. It's been there's a channel. I wish I could pull the chart together and show it. I don't know how. We'll have to talk about sharing my screen, but there is this channel that rates have been going up. But like you said, there's been this cushion that the lenders have built in the last several months because they can't lower rates any. Like I was talking about last couple of weeks, they can't lower them any further. They've been keeping them artificially high because if they lowered them any further, they'd be 10 times busier than they are right now. So they can't handle so that's kind of helped mortgage-backed security rates comparatively speaking to Treasury rates hasn't been as infected as it was in the past. So yeah, this last 4 days has not been good to rates. I mean, technically speaking, they're still in the high twos, but when I say rates are going up, rather than getting 2 5/8, you might get 2 3/4, or basically 2 7/8. They're kicking around the low still, but it was not a good 4 days. I mean, I think they're going to back. There's been a lot of reaction about this. There's a lot of news out there. There's just the Georgia, the Trump, the impeachment now again, and there's a lot of uncertainty, and rates, do get jittery when you get that type of uncertainty. And
I don't think you can impeach somebody in 13 days, so I don't quite get that. But going back to the Cromford Index, the Cromford Index has a number of 100, meaning the market's balanced, right? And I don't know how he calculates that because he's the mathematician at ASU, not me. But 100 is considered a balanced market for both buyers and sellers. So if you have an index of 125, it's starting to favor sellers. So you watch the trend, and as that number grows and favors sellers, you get farther and farther away from that balanced number of 100. I'm glad you're sitting down and listening to these numbers. Gilbert, 717. And Chandler, 701. Those are the two markets right now that are suffering dramatically from lack of inventory. And it's a seller's market like there's never been. And then Phoenix is hovering around 479, which is still considered astronomical. But Chandler and Gilbert, I mean, there's nobody even close. They're getting gobbled up, and the listings are coming on and they're going. And so you do a search for those areas, and you're not going to. You drill down the neighborhoods, you're not going to find much. But I'm noticing a lot of green dots, which are the listings, kind of concentrated in those over 55 neighborhoods, like Sun Lakes and Sun City. Their inventory is coming up, not in a big way, but people are putting their homes on the market in those areas. And but I've always said that over 55 communities have their own economy. It's not like any of them got laid off. Most of them are already retired. So, the job losses and stuff are not affecting them. There is nothing good looking for the first quarter, according to the economist at Wells Fargo. He stated this week that everybody has to understand that the first quarter is going to be worse than anybody thinks it's going to be. And he followed it up by saying the second half of the year is going to be far greater than anybody anticipates. So he's saying that as you get outside of March and April, that things are just going to bust loose. Now there's going to be some collateral damage, some businesses that are closed that haven't opened yet, and we don't know the depth of that. But what he's saying is their data is showing that once you start seeing some COVID relief and things open up, that it's going to take off. It's like telling your kid he's on restriction, and he's been on restriction for 9 months, and finally, okay, you can play outside now. And they're just going to bust through the door and meet all our friends in the street and start riding bikes. And the economy is doing it. When you look at M2, a lot of money just sitting out there. And M2 is kind of confusing too. It says that that's the measure of our money supply, but the money supply is really inside of bank reserves. So they're not lending out enough to increase the velocity. The only way that we're going to see an increase in velocity is if the Treasury does something to get more money to consumers, i.e. another stimulus check, or things such as infrastructure spending, which we may see. I hope we see that on a large scale that puts people back to work. Real estate shows absolutely no signs of coming down. I'm not a big fan of them floating around this $15,000 first-time homebuyer credit, because I just think that's just going to make things worse. I mean, it'll be, just Yahoo for the first people getting in, right? But our problem isn't on demand. Its problem is supply. Yeah.
I mean, there's obviously an issue with first-time home buyers. I mean, the median price point, you're looking at the average home right now, really realistically is, in the $325,000, $350,000, $375,000, $400,000 range. How much is that going to really help? I mean, $400,000 home, 5% is 20,000. You're not even talking about the closing costs yet either.
Yeah. It's going to be interesting. We're going to start seeing some slowdown just based on affordability, but we're not even scratching the surface of it now. We're not seeing it in any price point. I think the numbers that I'm looking at now that show that our listings finally exceeded the number of homes under contract was just a fluke 7 days. But I think the listings that we've been expecting to show up in January are not going to show up till March.
Yeah. I don't know about the opening. I think there's going to be a lot of trauma, people being traumatized by this. Do you really think that do you think there's going to be a day where they say we're all good to go, or this is just going to trickle on through the year?
I think it all depends on how much the restrictions have loosened up. Like my son went to San Luis Obispo for his girlfriend's birthday. And now he has to quarantine for 14 days. They say if you go from one county to another, you come back. So he's got 2 weeks off from work. And fortunately he's an animator, so he's doing a bunch of private projects. But until those things go away, we're not going to see this surge in economic activity. But I mean, just imagine if all of a sudden now restaurants can be 100%, and all the gyms and yoga places could open, and this, you're going to go out to dinner. If things open up, you're going to go out. And if there's, I think Arizona's only got like 25% of the shots that have been sent out have been given. Seems to be a little bit of a logistics problem when it comes to speed of getting these shots out. Florida's leading the way with shots because they've actually, you can go into Publix, a grocery store, and get the shot now. Yeah. So, they have a better system, whereas New York, the governor there's made the rules so cumbersome that they're hardly rolling out the shot at all. He's fining people. And so until all that goes away, Pat, I just think we're going to be,
Yeah. And like going back to rates, I mean, rates, kind of had a last 4 days, obviously with the elections, but I think they will settle down. I think we're going to get back to some normalcy on the interest rates, but there's just no clear path. I mean, it'd be nice if somebody could ring a bell, like we talk about ringing the bell, and saying, okay, we're ready to go. It just, I don't see it happening. I wish I could say the June 1st, everything's gonna be fine.
Yeah. I think, well, the Fed has come out and said that they are going to hold rates down to 2023, and they want to see inflation start showing up. Now you're starting to see a lot of debate in the financial sector that says they may not get to hold rates down through 2023, because if it starts taking off, if things get moving, they're going to have to pull back. The market's going to pull the rates up before the central bank does. So, and I think that's what you saw this week. Is that was not a Fed move. That was just the market saying, we're a little nervous here, and the treasuries went up above 1. So, we've
had the luxury of having rates, like you said, Mike. I just remember last 2 weeks or so, I was it was just uncomfortable, just moving along, and you knew something was going to break out. The rates give you about a period of time of about anywhere from 7 to 10 days. If they consolidate, you just get this gut feeling. I just had this. I knew, I didn't know what day, but it was like it kind of figured out that after the holidays, something was going to break.
Do you follow Bitcoin at all, Pat?
Not as much as I should be, but yes, I tripled.
It was running about, I don't know, $10,000 for a while, and it's way over my head. I mean, I don't know what blockchain even means, but it's bouncing around, almost hitting 40,000 today. I mean, from the inception of when Bitcoin came out to now is a 9,000,000% increase. I was talking to a gentleman yesterday that said his brother bought Bitcoin when it was $35, and you can buy it in increments, right?
Yeah.
I think I own 0.02 point something percent of a full coin. Well, he said his brother's worth $45 million. And it's one of those things you don't want to ignore. And it has taken off this week for the same reasons that I think rates popped up an 0.8%. Nobody likes uncertainty. Now, the new administration now controls all 3 branches of the government, but not at enough of a margin to where they can get everything they want. So, they can't, the Democrats can't afford to have 4 people defect, and the Republicans can't afford to have 4 people. So, the Senate is 50-50 with the tying vote being Kamala Harris. But if you're trying to push something through and you want the majority to go, you've got to have everybody on board. So I think the majority of the big ticket items that they want to pass, I think they're just going to be stuck.
Yeah,
they're not going to move. I think Congress can always agree on anything when it comes to spending money. So I did make the comment that they're all going to spend money like a drunken sailor, and I still feel that way. But I think there's going to be some other things like the tax hikes that they want to propose that I think are going to hit some log jams. And I hope they hit some log jams, because I don't think we need to be messing with the taxes too much yet. I don't want them coming up with any crazy ideas on how to throw new taxes at real estate yet either.
No.
But, so I think, as we look forward going into next week, I'm going to be really curious to see if this 7-day moving average that I have now shows contracts below listings, if that was just a freak thing, or are the buyers kind of sitting out for a while? Because that's a key indicator. That would actually be very good if buyers sit on the sidelines for a while and give this inventory a chance to pick up. But the activity that I'm seeing on searches, especially on my website, is that hasn't backed off a bit. So they're out there looking like crazy.
Yeah.
And still getting phone calls from all over the country. So,
well, hopefully we get rates to settle down. Like I said, the gap that we saw in the last week has been kind of I think a reaction to all this election stuff. We're going to see rates kind of back down a little bit. I mean, I don't see them. Anybody was, like you said, the last couple of weeks, people were waiting for them to go, from the mid high two, the mid to high twos to the low twos, just wasn't going to see it probably. So hopefully we'll see some.
It'd be nice to sit back and wait for a while, but man, rent's still going up like crazy. But the other thing to watch too now is the single family home rent is going up faster than luxury apartments because people are leaving those. It's geography and space that people are looking for now. They want to get out of that apartment, get some room, get some room to outside to get into their office because most apartment complexes, you can't use the gym or you can't, use the clubhouse. It's closed. So they're like, well, what the heck am I living here for now? Let me go get a house. And paying $1,400 a month for a 1 or 2 bedroom place. Let me go buy a house and spend, $1,600-1,800 a month and it's mine. So there's still that pressure for people to go. And I did read that credit scores have gone way up this year versus last year. People, they're paying down they're not spending money and they're not running up their credit cards. But credit scores went up. I think the average credit score was 710.
It's a little higher than that. I mean, it depends what survey you're looking at, but I've just been seeing higher credit scores too across the board. Anywhere from the low to mid 700s to the high 700s. Just people are more getting their ducks in line.
Yeah. Well, next week's going to be an interesting one to watch. Again, I think it's hard to describe just how dire the inventory situation is. It's just lower than low. I wrote an offer for a client from Chicago last week, right after Christmas, and we got it accepted. I'm not going to say the price, but there's a lot of activity going on, and it was in the neighborhood that they were looking for, and they pounced on it. So it was only on the market maybe a day or two, and they grabbed it. And so that's where you have to be in this market. And don't be afraid to have your agent write offers, and don't be so discouraged by missing out on some of these that you quit trying, because every once in a while there's that home where your offer just looks attractive because of the terms, and they go, well, I'm gonna sell to them. And so, you can get a full price offer accepted. It happens. But the scary thing is when most people have lost out on their third home, they tend to do something that isn't in their best interest when writing an offer for the fourth home. So the best advice is don't be so discouraged that you just throw everything at it. And we have a comment here. It says, been reading about taxes being due for those on forbearance. Think this will have an effect on the housing market? Are you hearing anything about that, Pat?
I haven't been hearing anything about that at all. I mean, in terms of I wonder what he or she's talking. I mean, as far as maybe investors owning homes.
I have read that the taxes, when it comes to forbearance, the taxes that I've read they're referring to are your real estate taxes that, you haven't been making your mortgage payment, but your real estate taxes still due. Your escrow account is still due. So if you have been not paying your payment and you also haven't been paying your taxes, that can come to bite you. And where that's really going to be a problem is in states like Texas that have like a 2.4, 2.7% tax rate. So on a $175,000 house, your taxes are $4,400 a year. Whereas in Arizona, your taxes would be, $1,750. So high tax states like Texas and New York and Illinois, if you haven't been making your payments, then yes, he's right. He's saying property taxes and escrow. Yeah, that'll come back to bite you. They're going to have to make that up. But having said that, most people have enough equity where they can, sell the house, pay off the tax debt, do whatever they can. They can get up underneath it right now because we're going up at an easy 15% clip still.
Yeah.
And with these inventory numbers as they are today, we're going to be clipping at a 20% rate. There's no There's no denying that, unless there's some kind of black swan event that comes sweeping in that makes the economy go sideways. The numbers are saying that house prices are going to continue to fly upwards. So
Yeah, I don't see anything on the horizon at all. I mean, it's just been it just blows my mind.
yeah, there's nothing like getting up and having that cup of coffee and going and looking at the morning inventory and spitting your coffee out. Like, what? It's just and
Yeah,
doing
I spent my coffee last 4 days. That's a
Yeah.
difference, you know. But
All right. Well,
no, I
Pat,
think
have a good weekend. And oh, hey, I want to remind people, if you want to schedule a private Zoom call with us to go over some specific questions or to look at some markets, do a little drill down. I have a link in the comments section below that you can schedule a call. We have a call today at 4:30 with a couple of buyers, and it's a good opportunity for you to ask us some offline questions, and we can actually drill in and show you what's going on in the market. So take advantage of that. We're always here. If we're not here, we're there. So have a great weekend, Pat.
all right, Rick. Talk to you
Thanks
soon,
for
bud.
millions and millions of viewers.
Yep, exactly.
All right.